Now let's bring in CNBC contributor Trivariate's Adam Parker. It's good to have you back here. So we're kind of fixated on all of this. What do you think it means to stocks on both fronts? The lack of progress as it relates to China, and then the maybe stuck progress of this bill.
They're both bad directionally. I don't see how anyone would take the other side of that. The main thing that matters in the entire tariff and trade war is China, given their comparable GDP in terms of size. So you have like two tensions. Like you have this positive thing of like, you know what, retail flows, technicals, just seems like we're headed back to highs before we revisit it. There's a big group of institutional investors who just think nothing's going to break this, short of maybe big backup in bond yields or an incrementally slowing consumer. The negatives are the earnings estimates are only down year to date the same amount they are in a normal year. And the normal year that didn't include tariffs. So it kind of just feels like there has to be a set of bad downward revisions coming, and you get the valuations sort of back up where they were. So it just feels like you've got that kind of thing coming. So I think there's these two tensions out there, and most people are saying, I got to participate when the market's up. So they're trying to find, is it the mega cap tech or something else that can get them there? So I think it's kind of confusing. I think my note last week said I have vertigo about this whole thing a little bit, just because I can see the bull and bear case over the next few weeks.
You've been musing, I guess is a decent word, about potentially being wrong about the idea that earnings were going to take a bigger hit.
Yeah.
And you expected them to. I think many did. And maybe that's not going to come to fruition. So maybe you were getting too cautious on the market. Is that fair?
Yeah, I'll take the word musing. It's better than just, you
put out
slamming my head. Slamming my head. I'll take that as a compliment. No, I mean, look. I did some work last week. Half of the gross profit dollars of the entire S&P 500 come from the top 50 names. The top 50 names proved after COVID that they're kind of inflation-proof. They didn't really see any margin degradation when we saw kind of half-century high inflation. So if what we're worried about with the tariffs is inflation, we've seen these big guys able to pass on pricing, able to control their costs. So it's really the other half we're worried about. And I could see somebody saying, okay, well, the top 50 names are probably okay, right? That's why Mag 7 and others have rallied. Oil's lower, logistic costs are lower, generally commodities are lower, so that could help some companies. Dollar's weaker, that's certainly not a headwind. And so maybe from where we were in early April, last 2 months, like the earnings sort of calculus is directionally a tiny bit better. I think that's fair.
Let's address a couple things at how we started the program.
Yeah.
I can see it play out both ways.
Yeah.
Is a smaller bill good or bad for stocks? Because if you look at where the bond market is concerned, it would love a smaller bill,
right,
wouldn't it? But would the stock market be content with a smaller bill?
I don't see how the earnings math works. I don't think the tariff hit equals the tax benefit. It still seems like a net negative to earnings for me. But I agree with you on the multiple, on the priced earnings. If the bond yield starts backing up, people are going to worry about the multiple. So I think from the equity perspective, a slightly smaller bill could be better, even though I don't think the earnings will be, the dream will be as high. I think the multiple will hang in better.
How much do we need a resolution with China, whether it's some kind of deal or a capitulation on our part of the current level of the tariffs?
I think a lot. I mean, at these prices where we are with the earnings outlook, I think we need some progress. I just don't know. Every one of us has learned fade everything the president says. It's never as bad as he says. He says it's Europe, it's 50%, then that doesn't matter. He says we're working on something with the UK, and then you look at the details, and it's nothing. So I think that the challenge or the risk is all of us have said, don't really overreact to what he's saying. Actually react to when we see what the companies are saying. But I think this China deal really matters. I suspect ultimately what will happen is the president will say he won the negotiation independent of the facts behind it. And so that's what we all have to suss out as stock investors, is like what actually is going to happen. So what we're doing at Trivariate is we're searching every earnings call transcript for anything we can find related to tariffs and pricing. Meaning, is there anything happening with price increases, with capacity, with
supply chain? Well, you believe that there are many.